What went wrong in the tequila crisis? In late 1994, Mexico's currency snapped. Confidence evaporated. Markets panicked. A local headache became a global hangover. The tequila effect. Let me break it fast. The peso sat under a fixed exchange rate, held high. Imports surged. The current account deficit ballooned to about 8% of GDP in 1994. Federal Reserve 1995. Reserves drained, down roughly two-thirds that year. Federal Reserve 1995. Policy leaned on short-term dollar-linked debt, tesobonos, over $25 billion by late 1994. Crisis risk wired into the system, Brookings 1996. Then shocks, political turmoil in 1994. Rising U.S. rates pulled money home, Goldman Sachs 1995. With thin reserves and an overvalued peso, Mexico devalued and abandoned the peg. That move wasn't wrong by itself. The error was the combination, late, poorly communicated, and misaligned with fiscal and monetary policy. Investors saw inconsistency and bolted. Classic capital flight, Brookings 1996. Result? A spiral. The peso plunged. Inflation spiked near 52%. Banks cracked. Output collapsed, and poverty surged. Wikipedia 2024, Federal Reserve, 1995. Contagion hit other markets, the tequila effect, Federal Reserve, 1995. Error 1, maintaining an overvalued exchange rate while deficits widened, an intertemporal mismatch between external financing and tradable capacity, Brookings, 1996. Error 2, reliance on short-term foreign currency index debt. Maturity and currency mismatches amplified a sudden stop, Federal Reserve 1995. Error 3, policy inconsistency. Expansionary moves in an election year under a fragile peg. Credibility cracked, Brookings 1996. Error 4, communication failure. Staggered devaluation without a funded stabilization plan. Signals turned into alarms, Brookings 1996. Error 5, thin reserves facing large rollover needs. Liquidity risk was mispriced. Federal Reserve, 1995. The rescue? A $50 billion bailout led by the U.S. and IMF bought time. Federal Reserve, 1995. Pain followed, but Mexico pivoted, floated the peso, rebuilt reserves, tightened bank regulation, improved transparency, and installed crisis prevention frameworks. Brazilian J of Political Economy, 2006. Legacy, what sticks? For policymakers, don't peg high with loose policy. Align the trilemma. If capital is mobile, pick only one, stable rate or monetary autonomy. For markets, watch maturity, currency, and liquidity mismatches, not just size. For the world, contagion is real. Safety nets and credible communication matter. In one line, not just a devaluation, but a credibility break atop short-term dollar risk. Sponsored by CobiLaprove.com, producer of Cacao Norte Sur from Mexico. Analysis used AI, imperfect, but offers a wider view.